On April 2, 2025, President Trump sent shockwaves through the global economy. He announced sweeping new tariffs, declaring it both Liberation Day and Economic Independence Day for the United States. Trump argued that decades of unfair trade practices by other nations had disadvantaged the United States. These tariffs, he asserted, were necessary to protect American jobs and industries. This announcement followed a series of escalating trade tensions between the United States and its major trading partners. The global trading system, already strained by these disputes, faced a new test. Trump's rhetoric raised concerns about a full-blown global trade war. The potential consequences, economists warned, could be severe for all involved. Financial markets reacted with a mixture of confusion and concern. The coming days and weeks would reveal whether Trump's gamble would pay off or plunge the world into a new era of economic uncertainty. Let's explore the pros and cons of these tariffs starting as of April 2nd. The new tariffs targeted a broad range of goods, with the automotive industry hit hardest. A 25% tariff on nearly all imported cars and key auto parts threatened to disrupt global supply chains and raise prices for consumers. Trump argued it would revitalize American car manufacturing. The steel and aluminum industries faced further protectionist measures. Existing tariffs on Chinese imports were increased, bringing the total tariff burden on a wide range of Chinese goods to 54%. These measures, according to the administration, were in retaliation for unfair trade practices by China. The Trump administration hinted at further tariff action, targeting pharmaceuticals and the lumber industry. The administration also floated the idea of a 20% tariff on most imports. This sweeping measure aimed to generate trillions of dollars in revenue. These funds, the administration claimed, would be used to fund a tax dividend for American taxpayers. However, critics argue that these tariffs could lead to higher costs for consumers and strain international relations. The use of tariffs as a tool of economic policy is not new. The Smoot-Hawley Tariff Act of 1930, often cited as a cautionary tale, stands as a stark reminder of the potential dangers of protectionism. This act, which raised tariffs on over 20,000 imported goods, is widely blamed for exacerbating the Great Depression. The global trade wars of the 1930s had a devastating impact on the world economy. Despite these historical precedents, the Trump administration seemed undeterred in its pursuit of a tariff-heavy trade policy. Critics argued that these tariffs would ultimately harm American consumers and businesses. Higher prices for consumers and retaliatory measures by trading partners were just some of the potential downsides. The question remained, would the Trump administration heed the lessons of history, or was it destined to repeat the mistakes of the past? The announcement of new tariffs sent shockwaves through the global economy. Financial markets reacted with volatility, and stock markets tumbled. The value of the US dollar fluctuated as traders weighed the risks and potential benefits of the new trade policies. Economists found rare consensus in their warnings about the potential fallout from a trade war. Higher prices for consumers, reduced business investment, and slower economic growth were just some of the predicted consequences. Mark Zandi, chief economist at Moody's Analytics, warned that the tariffs could tip the U.S. economy into a recession. He predicted that if the tariffs were fully implemented and met with retaliation, the U.S. economy could contract by more than 1% within a year. Warren Buffett characterized tariffs as an act of war, arguing they would ultimately harm American competitiveness and innovation. Former Vice President Mike Pence criticized the tariffs as the largest peacetime tax hike in American history. He estimated that the tariffs would cost the average American family over $3,500 per year in higher prices. On the other hand, proponents argue that tariffs could protect American jobs and industries, encouraging domestic production and reducing dependency on foreign goods. They believe that in the long run, these measures could lead to a stronger, more self-reliant economy. The international community reacted with a mixture of dismay and anger. The tariffs, widely seen as a violation of international trade norms, threatened to unravel decades of progress toward a more open global trading system. Many countries, feeling targeted by the Trump administration's protectionist policies, threatened retaliatory measures. Canada and Mexico, linked to the United States through the USMCA trade agreement, found themselves caught in the crossfire. Canadian Prime Minister Justin Trudeau expressed deep disappointment with the tariffs. The European Union threatened to impose retaliatory tariffs on a range of American goods. European Commission President Ursula von der Leyen warned that the EU would respond in kind if the United States did not reverse course. China vowed to retaliate with tariffs of its own, accusing the United States of bullying and protectionism. Japan expressed deep concern over the tariffs, calling for a return to dialogue and cooperation to resolve trade disputes. The global backlash underscored the far-reaching implications of the new tariff regime. On the positive side, proponents argue that the tariffs could protect American jobs and industries from unfair foreign competition. However, critics warn that higher prices for consumers and strained international relations could outweigh these benefits. The global economic landscape is shifting as countries navigate the uncertainties of a new trade order. The imposition of tariffs, starting as of April 2nd, has forced businesses and governments alike to adapt to a more unpredictable environment. Companies are reevaluating their supply chains, seeking to mitigate risks and maintain competitiveness in a volatile market. Policymakers are grappling with the challenge of balancing protectionist measures with the need to foster international cooperation. As the world watches, the long-term consequences of these trade policies remain uncertain. What is clear, however, is that the global economy is entering a period of significant transformation, and the actions taken today will shape the economic landscape for years to come. Thank you for watching. If you found this video insightful, please like, share, and subscribe to the Think Tank channel for more in-depth analysis and updates.